So, an ugly day on Wall Street yesterday when we had the Fed come out and gave its basically expected rate cut of 25 basis points, but a hawkish 25 basis point rate cut, which caused the stock market and the bond market to just drop. We saw NASDAQ, S&P 500, the Russell, Dow Jones all sell off aggressively along with the bond market as well, especially the long end of the bond market sell off aggressively on a hawkish Fed. Now what happened here, right? So to summarize, in my opinion, the hawkishness was expected, right? I said this on this channel in a previous video that expect the rate cut 25 basis points to come and expect Powell to slow down on the aggressive rate cut that he's been doing, right? So we expect him to, sound more hawkish. And, lo and behold, we did get that. Now, I wasn't expecting the markets to react in this way, this aggressively. But hey, the markets can be irrational longer than you and I can remain solvent, and the markets can do whatever it feels it wants to do. But when you look at it, it sold off quite aggressively, hinting towards a lot of people probably were long, especially after Trump's victory, and a lot of them probably got out on this day who were long since Trump's victory, right? If we look at the Dow Jones and the Russell 2000, basically wiped out Trump's basically green candle that we saw in those markets. We're back to price level one at those today in the Russell and the Dow. So basically telling us all those longs are just simply wiped out. Now, what caused this aggressiveness? Now, there are a couple of things here. The projections that came out, they increased the Fed funds rate, which basically they were expecting before in its projections about 4 rate cuts, and they slashed it down to now 2 rate cuts. So that was considered quite hawkish. That okay, you're only going to get 2 rate cuts next year. The other thing that the Fed did was also hint towards the slowdown of cutting rates, hint towards that they still need to fight inflation, and hint towards that, the economy, the job market, it's still okay. Nothing is completely breaking. We're still in an easing cycle, but we need to see how things play out in terms of the data, and based on that, it will determine where we are when it comes to the terminal rate and as we approach that level. Now, we don't know what that level is, and the Fed also admitted he doesn't know what that level is, but basically sending the signal that, January next month, you're not going to get the rate cuts, 90% probably no rate cut, and that it's going to be much, much, much slower next year. Now, first of all, this obviously can change. The Fed doesn't know. The Fed doesn't know what they're doing. That's the problem. And we've seen it countless of times where the Fed has been wrong and they've changed their minds multiple times. They're going to tell us that they're not going to cut rates as aggressively, and then Jan, Feb, first quarter, second quarter hits, they'll just change again and start cutting rates maybe more aggressively. Why? Why would they do that if the labor market starts to tank? So we can't trust the Fed here. We can't completely listen to the Fed because they keep changing and they simply don't know, right? Now, they may worry, that inflation might pick up again. And when you look at certain components of the inflation report, shelter and food component continues to be quite elevated. Now, in other hawkish news that came out, which was a surprise, He basically mentioned that they were kind of on the fence also of cutting rates yesterday, right, in December, um, which was a little bit shocking because the expectation was that yes, he was going to cut interest rates in December, and in the fact that he was, the committee being kind of on the fence, basically tells us that they were even ready to not cut rates, which would be even more hawkish. But just saying that itself just basically states that that meeting was quite hawkish, and it's one of the points that may have also caused this sell-off in the equity markets. Now, we also need to monitor more in the upcoming data how the jobs numbers come out. If that continues to be okay, then you're going to continue the hawkishness there. If it ends up being horrendous, then obviously he's going to change once again. The other things that were there, other than mentioning that he was looking to cut less in terms of interest rates, he did mention that there's downside risk to labor market, but still cooling. He mentions that it's premature to make any conclusions about tariffs. Don't know what countries and what size and how long. He also mentioned that we have to continue to have restrictive policy. So again, hawkishness there. Housing services inflation has come down steadily. That was a good point. Higher rate is lower, then that's a signal for further softening. We need to see more progress on inflation. Geopolitical turmoil remains at risk. Inflation has been a little bit more stubborn. That's hawkish. It's appropriate to proceed cautiously. And when Powell was asked about hikes, this is what he said: you don't rule things completely in or out in this world, but that doesn't appear to be a likely outcome. Right? So even rate hikes are not ruled out. But it's unlikely unless you get a moment where inflation ticks up all of a sudden. Then sure, maybe that could happen. So overall, all in all, my opinion, this was expected. And I've been saying it on this channel for some time. It's expected he's going to be hawkish. He's going to tone it down, right? But even though it was expected, in my opinion, the markets took it way too far. And that could just be, them in shock because of the 2 rate cuts for the next year. And it could be also a liquidity thing as well. There was, if you look at the liquidity, it was nothing but selling, hardly any buys. It was thin when you look at the liquidity. And then you had the bond market selling off, and the long end yields are continuing to move up higher. That creates more tightening conditions. And also people are probably max long, right? I mean, the equity markets, the S&P 500 went to about close to 6,200 there. We broke through highs. People probably saw that, started chasing. So a lot of reasons there. So just a complete meltdown on that. And now the S&P, as I speak, sits below 6,000. So, what can we expect here? What I'm really looking at and what worries me is the bond market. If those bond yields continue to go up, that could create more, fear in the equity markets, especially on the long end. And I'm seeing the yield curve is starting to pick up. So I'm going to keep an eye on this bond market and see where it goes. That could signal to us something, getting worse than what people anticipate. But for now, for 2025, I do expect that, yes, Powell is going to be more hawkish initially, and then data is probably going to soften, and then Powell's going to change again and start cutting rates and end up being, more on the easing side. And that will probably come in times of panic and in times of when the shit is hitting the fan. So I think that's the next phase. The next phase is, yes, pause, some selling pressure in the equity markets, and then afterwards we might pick up again because he's starting to ease again, and then somewhere along the lines, later in the year, next year or so on, you start to see the data really weaken, the unemployment rate skyrocket, the jobs data get worse off, and then the panic from the Fed just slashing rates. So we can't take the Fed's word here that, we're done with cutting rates, or we're going to really slow down on cutting rates. I don't think so. Just from looking at history, I think, yes, this might be a pause, a temporary pause or slowdown, but I believe he's going to go back to picking up on cutting rates more than 2 times. But let's see, right? Anything is possible, especially with Trump and the new administration, and we'll see how inflation plays out. But that's what I'm looking for in 2025. So yeah, let's see where the markets are right now. If we look at the equity markets, it is we did see a pickup in the overnight session in the Asian markets and the European markets. And as I speak right now, around 12 o'clock here, we're seeing a little bit selling pressure. So let's see if we can see another low in the equity markets either today or tomorrow, and see if there's any bottom in the sell-off. So anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers, bye.